Ladies and gentlemen, welcome back to the channel. Tesla stock coming under pressure today, at least a little bit at the time of recording this video, down about 1%. And I will share with you all of your breaking news you need to know. And the reality is, until Tesla earnings, I expect we're going to have a certain degree of pressure on the stock, considering it's up from the 215 lows or so we were just at a couple of months ago. People have profits if they were buying the dip, and until Tesla earnings come out, in which I think they're going to be a lot better than people think from a numbers perspective, but really from a future guidance perspective, there's going to be some pressure on the stock. You got to understand this. It's going to rally all at once when it does rally, and we'll discuss that here in this video. Ladies and gentlemen, we have a lot to get into. I do have one clip from CNBC to share with you as well. Hit that like button and subscribe to the channel if you have not done so already. But also, if you guys are looking to find the next 10 bagger, 20 bagger, hell, 50 bagger, that is what we are doing over in the trading community. Link down below in the description of this video. Obviously, not financial advice. Anything can happen, blah, blah, blah. But we are setting ourselves up to find the best small cap stocks that have the best, AI growth prospects that are underlooked. Like, I go extensive. When I find a stock that I think has potential, I want to figure out where's the crux. What am I missing? Where is the fault of that company? And well, sometimes you just never find them. And those are the stocks that you really want to invest in. One of which specifically I've invested a lot of money into, very excited about. A couple biopharma names as well. I think we're up to 6 now stocks we found in the last couple of weeks that are, up to 50 bagger opportunities. So if you guys want to strive for those outsized returns, check out that link down below in the description of this video. I share my trades, I screenshot things, come chat with us 24/7, 7 days a week. So with that said, let's go ahead and get started. So here we are. Let's start with your Tesla stock news today. Tesla is now sending out emails to people in the US informing them that the $7,500 federal EV credit will expire on September 30th. You must take delivery of a qualifying Tesla vehicle on or before September 30th, 2025 to be eligible. This is most likely from individuals that have recently visited Tesla's website or put in some kind of inquiry for a new Tesla. This is a reminder like, hey, if you still wanted to get that Tesla or were interested, well, now is probably a good time to do so. And most people expect, even funds on Wall Street expect that we're going to have a pull forward of demand heading into September 30th. So this quarter could actually be really strong for Tesla. And here we are getting a first look at Tesla's completed Hollywood Diner and Supercharger. And I have to say, this thing does look incredible. Very futuristic, but kind of a more, older styling to it, obviously with the diner. And definitely can't wait to visit this thing one day, and hopefully they're more common in the future. This would be, I think, a pretty cool little side endeavor for Tesla to branch into. Now, RBC Capital Markets analyst Tom Narian says, quote, "The recent Tesla sell-off has gone too far. We believe there is strong demand for Tesla products even in the face of more EV competition. Tesla's lead, profits, cash generation, and currency are a major advantage that helps it to fund growth. The long-term picture," Narian argued, "justifies holding through the current rough patch. RBC values Tesla's core car business at 1x sales, but gives premium weight to its long-term plays like Megapack energy storage systems, autonomous driving, and AI. The firm applies a 15x multiple to 2024 estimated EBITDA for Megapacks and a 10x revenue multiple to Tesla's future robotaxi and humanoid robot operation." So that's really important to talk about here, okay? Because everyone kind of interprets valuations differently. One person might say, 10 times sales, where Tesla roughly trades at today. It did like 100 billion in revenue in the last 12 months. It's trading at about $1 trillion. That's about 10x sales. Some people might say that is expensive. Some people might say it should be closer to 20x sales. Valuation is all relative to what someone is willing to pay. One person might be willing to pay, $200 for the Mona Lisa painting, right? Another person might be willing to pay 200 million for a Mona Lisa painting, as kind of an extreme example. But what is important to understand is from a valuation perspective, Tom Narayan's going out to 2040. That might sound ridiculous to some, okay? But as rates come down, as there is no longer, other safe alternatives that yield you, 4.5%, like on a 10-year treasury, it starts to seem a lot less ridiculous to even some of the individuals that might think Tesla's valuation today is ridiculous, okay? Valuation is all kind of dependent on, hey, what can I get yielded in this investment versus that one, okay? So as interest rates are projected to fall a lot over the next 2 years or so, the valuation argument becomes less and less of a headwind for Tesla. More people will start to say, hey, where will Tesla be in 2040? And justify taking investments today in Tesla based on that mindset. Now, he goes on to say that despite mounting headwinds and technical signals that are flashing red, RBC Capital Markets analyst Tom Narayan said the recent Tesla sell-off has gone too far. In a new note to clients, Narayan reiterates his outperform rating and raised his price target to $319 per share, up from $307 per share. That implies about 7% upside from current levels. RBC projects Tesla's revenue will rebound to $111 billion by 2026, up from an estimated $93.5 billion this year. Adjusted earnings per share are expected to rise in that period from $1.99 in 2025 to $2.99 in 2026. Those gains would be fueled by expanding production, new product launches, and higher margin growth from non-automotive businesses. Narayan also pointed to a potential boost from Tesla's robotaxi, which could reinvigorate investor enthusiasm around its full self-driving ambitions. Quote, Tesla is EV's poster child, RBC argued. Piper Sandler analysts recently called the company, quote, the most transformative company in autos, noting that in the longer run, it will likely win. Still, RBC flags several risks, including volatile earnings, cost inflation, and supply chain hiccups. The firm also notes that Tesla's business is cyclical and vulnerable to broader economic slowdowns, especially if rising interest rates or geopolitical shocks weigh on consumer spending. They say, quote, company and quarterly results may be lumpy due to timing and a variety of manufacturing issues, which could cause stock price volatility, Narayan noted. However, Tesla is a growth company. And I think also worth mentioning is Elon Musk has actually said this on the most recent earnings, that the consumer's weak. The demand environment is weak, that if Tesla has weak results, it's not because of people boycotting the company or people, not wanting to buy a Tesla. Elon says there's really no demand issue from that perspective. The issue really is the consumer is weak. Besides Europe, he said Europe kind of has that political left-leaning bias and does kind of revolt a little bit against Tesla, but Europe doesn't really matter in the grand scope of Tesla's business, Tesla's deliveries. It's not the make or break factor for Tesla's delivery numbers. That's worth mentioning because I do think with the big beautiful bill, if we can call it that, there is some really positive things that could help the consumer, like no tax on tips, no tax on overtime. No tax on tips is up to $25,000. That will save people roughly $5,000 to $6,000 in taxes. Okay, that's not small per year. Okay, and no tax on overtime up to $14,500 is also kind of impactful. That could help 60 plus million people kind of get back on their feet at least a little bit. And what are they going to do? They're going to buy cars. They're going to spend money, so on and so forth. I also think with cutting rates, that's going to alleviate the strangulation that is on this economy right now. The economy has been strangled for years. Interest rates have not needed to be this high for a long time. Like, we are well past that inflation, point in this cycle where rates could have came down a long time ago without stoking inflation. Right? The inflation numbers that we're actually seeing are fugazi. They're bullshit from the start. If you look at like Europe's models for CPI, there is no inflation problem. We are below 2% if you exclude shelter like Europe does. Shelter is its own issue because we've seen so much immigration and there's a lack of housing in this country that is it even fair to include shelter in CPI calculations? Probably not. Excluding shelter, we haven't had inflation for years. So these higher interest rates are really just putting, restriction on this economy and choking out the economy. As we get rate cuts, as we see rates come down, I think the economy is going to get a lot better. I think the consumer is going to get a lot better. And I do think that from a demand perspective is going to be huge for Tesla. Mix that with a consumer getting better and Tesla coming out with cheaper, lower priced Teslas. That's going to be great. I mean, for the average person, you don't need 300 miles of range if you're charging your vehicle at home and you drive 30 miles a day or less. Like, getting something that makes sense from a price perspective, okay, that gives you the same kind of utility you get from a normal vehicle for, cheaper price, makes a lot of sense. Now, that's what Wall Street cares about right now, okay? They care about deliveries, they care about growth in deliveries, but I do think over the next 6, 12, 18, 24 months, as rates start to come down, it's going to be a lot more about the AI story at Tesla. And that is the big piece of the puzzle that is missing at this point. And that's why I'm not expecting Tesla to do anything grand or crazy as far as the stock before earnings. Because the piece of the puzzle we're missing is guidance around AI. It's guidance around robotaxi. We have no idea what these scalability prospects are going to look like in reality for Tesla next year. We can all speculate and say numbers, but we haven't heard anything from Tesla. And until we do you think analysts are going to go out on a limb and say, hey, we're expecting XYZ amount of robotaxis next year? No, because roughly around July 20th, when we get Tesla earnings here in about 2.5 weeks, 2 weeks or so, that number could change. Tesla could give us a really high number or a really low number, and analysts would look stupid. And that's why you have not seen any analysts come out and share their projections besides just, spitballing some numbers. Like Dan Ives has said Tesla could be in 30 cities next year without really giving robotaxi number attached to that. After Tesla earnings, I'm expecting to hear a number in the thousands for robotaxi deployment next year. And that's when you'll have to start pricing in what robotaxi could look like long-term for Tesla. Like, nobody's talking about what robotaxi could actually, look like by 2040, for an example, 2030, for an example, which when you start to look at those numbers, yeah, Tesla looks like a bargain today, in my view. But we won't know that until Tesla earnings. Also, in regards to Tom Narayan and RBC, he is a 4-star rated analyst. So he's at, top tier when it comes to analyst. A lot of analysts are, way worse than this. Now, there's also a lot of growing speculation that Elon is not going to do much for Tesla as far as new products, things like that, until he has control of the company, until the board gives him a new compensation package, which there was a special committee set up back in April to come up with a new package for Tesla, for Elon. So there's growing speculation here. That makes sense, maybe why Elon is diving more into politics, like with his first compensation package. You know, it was market cap tiers for the most part. There was delivery and financial prospects along with that, but it was really mainly market cap tiers, okay? Getting Tesla to certain market caps, which at the time sounded like a crazy compensation package. Like, why would anyone take that deal? You're essentially not going to get paid unless shareholders make a lot of money. So Elon was highly incentivized to say the right things, to not say certain things. And these days there is zero, like zilch reason to act a certain way for Elon. Getting his interest aligned with shareholder interest from a financial perspective makes a lot of sense. And I think when that happens, you're going to hear a lot less from a political side of Elon. But hey, we'll have to wait and see. Now, in the news today, Mexico's President Sheinbaum says Mexican copper exports benefit U.S. industry and the U.S. economy. Mexico's President Sheinbaum says Mexican officials will talk about the border and trade in D.C. on Friday. Mexican president says, quote, "Let's wait," when asked about Trump's tariffs on copper import. Trump says any country aligning themselves with the anti-American policies of BRICS will be charged an additional 10% tariff. There will be no exemptions to this policy. Trump says our Fed rate is at least 3 points too high. And he again calls on Jerome Powell to lower the rate. U.S. wholesale inventories month over month came in at negative 0.3%. The forecast was positive 0.2%, but this is not really a huge catalyst. It does feed into GDP expectations a little bit. We can see the Atlanta Fed GDP Now tracker is currently sitting at 2.6% with the latest estimate that came out today via those wholesale inventory numbers. Now, what is also important to remember is the contribution of inventory investment to annualized second quarter real GDP growth decreased from negative 2.13 percentage points to negative 2.15 percentage points. So there's some subcomponents of the GDP data that don't look as great. And here today, NVIDIA becomes the first company to reach a $4 trillion market cap. And Trump on Truth Social says anybody but too late. He's just calling him too late. That's his new name for obviously Jerome Powell. Jerome Powell at this point, honestly, should just resign. He is he's clearly incompetent or compromised. EU's trade commissioner says, "I hope to reach satisfactory result in the coming days." Obviously, on trade with the US. And the EU Trade Commissioner says trade talks continue remotely every day with the US. Trump trade advisor Navarro says Apple thinks it's too big to tariff, which sounds like a threat to Apple. EU Trade Commissioner tells EU Parliament our priority is a negotiated solution with the US. Navarro says that markets understand that trade letters are negotiations. This is what I've said for the past couple of days since we heard about these trade letters. It's not the end all be all. It is the worst, case scenario for, let's say, South Korea or Japan that have received these letters. It is that 25% rate. If Japan and South Korea want to negotiate, then the rates are going to go lower. It's kind of like a rip the Band-Aid moment off where, hey, this is the worst possible scenario and it gets better from there. So it's kind of a good way or good thing for the markets, right? It's hey, this is the worst case scenario. Odds are it gets better from here, but if it doesn't, hey, there you have it. There's the rate. EU's commission says we aim to reach a trade deal with the US before August 1st, potentially even in the coming days. And German Chancellor says, I am optimistic we can agree with a deal with the US by the end of this month. Now take a listen to this clip on CNBC. It's only about 4 minutes long. It says, this market is characterized by momentum and FOMO, says Interactive Brokers Steven Sosnick.
Back hitting a record high in NVIDIA at $4 trillion. Let's bring in Steve Sosnick, Interactive Brokers Chief Strategist. Steve, what do you make of this, especially against the backdrop of some of the recent moves and momentum that we've seen?
Well, Leslie, to me, I could characterize this market as a combination of MOMO and FOMO. It's momentum. There's also a fear of missing out. I think the NVIDIA number is a nice milestone. Once it gets sort of in the public consciousness, these numbers become magnets. So it was sort of inevitable. And I think the character of today's rally, though, is very much of the don't short adult tape variety, because this is a week where we don't have a ton of catalysts. The only catalysts are the ones coming from the tariff talks. And the market has been basically conditioned to look through them or ignore them or look past them because, they're just, it's behooved you to do so, and traders tend to keep doing what's working for them.
Yeah, you mentioned in your note that it's the half-life of tariff reactions has been steadily shrinking. Do you think that's because of the specific announcements coming through? Do you think it's what we're referring to in terms of the psychology and the fact that, now that we look back several months later, we can say, oh, well, if you just didn't sell in April, you would have, largely been okay?
I think it's more the latter. I think again, the lesson that traders are taking away here, rightly or wrongly, is, ignore these because something will come out of them that'll be better. They're never going to be as bad as we want. The July 9th became August 1st, and there were the nasty letters that went out, but there's room for wiggle room. There's room for negotiation in there. So the market is always taking that point of view. At some point, there is a reckoning to be done with here, but the market just chooses not to. And so if you've gotten conditioned to see every dip as a buying opportunity, then at some point you don't even really want to react to sell, because why sell? Because it's going to go up more. This is the I'm not saying this is like the strategy that one should be doing all the time, but this is the psychology that I think is going through a lot of active traders' heads.
What do you think breaks then that kind of reaction function? Is it a rate change? Is it an earnings trajectory change? Both?
I think an earnings trajectory change is very possible. Talk about like no catalyst today. Well, we get a whole lot of them starting next week. And what's very different about this earnings season to me is I can't remember last quarter, where basically companies could say, guidance? I don't know, guidance? What am I going to do with guidance? And the market was like, okay, yeah, we're fine with that. Think of how insane that is, considering what markets have been doing. And it made sense at the time, but I don't know that these companies are going to get a pass this time around.
In terms of pulling guidance or lower, whatever.
They have to deliver. They have to say something. And I do think in some cases, with the lack of clarity, they're not going to be able to just fudge it for a while. They'll probably give if-then statements, like if the tariffs are this, our guidance is this. If not, then something else. But they're going to have to say something, and that's going to be an interesting measure as we go forward.
Yeah, I guess those companies that do have a direct impact or some kind of sensitivity to the consumer reaction to tariffs have to say something. I wonder if the market's just trying to resize the tariff risk a little bit and say, look, the S&P 500, it's 40%, these 8 companies or whatever, 10 companies that don't really matter when it comes to the tariff debate.
That's a large part of it. Is basically we've been increasingly top heavy in our performance. We came on the air talking about NVIDIA.
Sure.
It's very much that AI driven trade coming in, and I think to some extent that that is what's moving things higher. But it is important to bear in mind for those who might actually be inclined to hedge that these momentum stocks that are leading on the way up also led on the way down.
Yeah.
And so for those who are inclined to hedge, if you want to hedge a big beta trade, you're probably better off doing it with NDX than you are with SPX, because these stocks, as big as they are in SPX, they're even bigger in NDX, and so you get the extra beta using that.
Yeah, sure. Momentum works in both directions.
Exactly.
Good reminder.
But again, just to kind of wrap this up, heading into Tesla earnings, none of this really matters. Like, I'm not expecting the stock to move up substantially, because you're going to have the nervous investors that want to deposition before a big catalyst like Tesla earnings. I think the more selling we do get, the better off it is for Tesla earnings. The more likely that we do rally after Tesla earnings. And I think we are going to rally after Tesla earnings. I think we're going to hear good things on the Model 2. I think we're going to hear good things on scalability. of robotaxi. So let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, check out the link down below in the description of this video for the trading community if you have not done so already. Have a great rest of your day, and I will see you in the next one.